Welcome back, investors. Today, we're diving into the world of financial institutions, those titans of the market that power global economies. Our focus will be on four major players: the Goldman Sachs Group, Interactive Brokers Group, Jefferies Financial Group, and the Charles Schwab Corporation. These companies represent distinct strategies and strengths within the financial sector, from traditional banking to brokerage and investment services. Let's kick off by looking at their price-to-earnings ratios, a key metric for understanding how much investors are willing to pay for each dollar of earnings. The Goldman Sachs Group currently has a trailing P/E of 17.86, significantly above its 5-year average of 11.00, suggesting a shift in market perception or a recent uptick in earnings. Its forward P/E of 14.31 points to expectations of more stable growth ahead. Interactive Brokers Group, on the other hand, carries a trailing P/E of 28.65, also above its 5-year average of 20.91, which reflects strong recent performance or growth expectations. The forward P/E of 27.59 signals that growth is expected to continue, albeit at a more measured pace. Continuing, Jefferies Financial Group shows a trailing P/E of 31.04, significantly above its 5-year average of 14.76, indicating high market confidence in its recent performance. However, its forward P/E of 17.75 suggests that analysts expect earnings growth to normalize. Finally, the Charles Schwab Corporation posts a trailing P/E of 28.34, higher than its 5-year average of 20.70. Its forward P/E of 21.53 indicates the market's cautious optimism for the company's growth potential. Moving to the price-to-earnings-to-growth ratio, a ratio below 1 often indicates undervaluation relative to growth potential. Here's how these companies stack up. Goldman Sachs boasts a price-to-earnings-to-growth ratio of 0.82, which hints at undervaluation and strong growth prospects. Interactive Brokers comes in at 1.53, showing a fair valuation for its growth. Jefferies Financial Group posts a price-to-earnings-to-growth ratio of 1.72, suggesting a slight premium on anticipated growth. The Charles Schwab Corporation has a price-to-earnings-to-growth ratio of 1.64, indicating balanced growth expectations with valuation. Now let's talk about insider ownership, a critical signal of management confidence. Goldman Sachs sits at 0.46%, typical for large corporations. Interactive Brokers continues the group with 3.47%, signaling stronger alignment between management and shareholders. Jefferies Financial stands out with a whopping 25.15%, showcasing exceptional insider confidence. And finally, the Charles Schwab Corporation has 5.87%, which reflects moderate confidence and alignment. Profitability is where the strength of these companies truly shines. Goldman Sachs delivers a return on equity of 10.21% and a return on assets of 0.74%, highlighting strong profitability in capital-intensive operations. Interactive Brokers outshines others with a return on equity of 18.53% but a modest return on assets of 0.52%, reflecting heavy investment in growth. Jefferies Financial Group posts a return on equity of 5.56% and a return on assets of 0.92%, indicating moderate profitability. The Charles Schwab Corporation achieves a return on equity of 12.11% and a return on assets of 1.09%, showcasing solid efficiency. Unfortunately, all four companies don't provide data for return of invested capital due to its high difficulty to obtain in the financial sector, specifically in banking companies. The evolution of shares outstanding reveals insights into shareholder value creation. In this case, Goldman Sachs has decreased its shares by -3.70% compound annual growth rate over the last decade, indicating a shareholder-friendly approach. Interactive Brokers has increased shares by 7.32% compound annual growth rate, likely reflecting capital raises or growth investments. Jefferies Financial Group leads the buybacks with a -5.51% compound annual growth rate in share reduction, emphasizing shareholder returns. Finally, the Charles Schwab Corporation has increased shares at 3.7% compound annual growth rate, highlighting expansion initiatives. Earnings per share growth is critical for evaluating a company's future potential. Goldman Sachs leads with an EPS of $34.08, projected to grow at a 21.89% compound annual growth rate over the next 5 years. Interactive Brokers posts an EPS of $6.67, with a strong growth rate of 18.73% compound annual growth rate. Jefferies Financial Group has an EPS of $2.55 and a projected growth of 18% compound annual growth rate. The Charles Schwab Corporation comes in with an EPS of $2.92 and an expected growth rate of 17.32% compound annual growth rate. Historically, Interactive Brokers has seen phenomenal EPS growth over the past decade, with a compound annual growth rate of 27.11%. Jefferies and Charles Schwab also show strong historical EPS growth, with compound annual growth rates of 10.2% and 13.42%, respectively, while Goldman Sachs has grown its EPS at a compound annual growth rate of 8.11%. Free cash flow per share is a key indicator of a company's ability to generate cash after capital expenditures. Interactive Brokers once again leads the way with a free cash flow per share growth of 31.97% over the last decade. Goldman Sachs and Jefferies are far behind, with negative free cash flow growth rates. Finally, Charles Schwab posts a solid free cash flow growth rate of 13.83%. For dividend-focused investors, these companies offer varying yields and growth rates. Goldman Sachs provides the highest dividend yield of 1.97% with quarterly payouts of $3, growing dividends at 18.49% compound annual growth rate over the last decade. Interactive Brokers offers a lower 0.52% yield with quarterly payments of 25 cents, but a 9.6% Interactive Brokers in dividend growth despite being flat from 2013 to 2023 and spectacular dividend growth this year of 150%. Jefferies Financial Group has a 1.77% yield with quarterly payouts of 35 cents, supported by a 19.33% compound annual growth rate. The Charles Schwab Corporation offers a 1.21% yield with 25 cents payouts and a 15.34% compound annual growth rate in dividend growth, but with a dividend freeze this year. Continuing with margin ratios, operating margin and profit margin that are key indicators of a company's efficiency and profitability. Interactive takes the lead here with an operating margin of 83.79%, demonstrating strong operational efficiency. Jefferies follows with an operating margin of 42.59%, and Charles Schwab comes in at 36.41%. Goldman lags behind with an operating margin of 12.59%. In terms of profit margin, Charles Schwab once again stands out with a whopping 18.28%, followed by Goldman at 9.27%. Interactive posts a more modest 7.72%, while Jefferies sits at 5.47%. When we look at the evolution of revenue and earnings over the last 8 years, all four companies show strong growth, but there are some key differences. Interactive has seen very positive revenue and earnings growth, which has been reflected in its market price outperforming the XLF ETF. Charles Schwab has also shown good growth, although its market performance has been more in line with the broader market, financial ETF. Goldman and Jefferies have both seen flat revenue and earnings growth, but their stock prices have overperformed compared to the broader market over the last 5 years. Debt is an important consideration when evaluating a company's financial health. Goldman boasts the highest debt/EBITDA ratio at 21.65, indicating a high level of leverage. Charles Schwab follows with a ratio of 8.98, while Interactive and Jefferies have lower ratios of 0 and 3.73, respectively. When we shift to debt/free cash flow, in this case, Jefferies shows the highest ratio with a ratio of 23.96, followed by Goldman again at 8.64, Charles Schwab at 2.21, and Interactive at 0. These figures suggest that only Interactive has manageable debt levels, but this high leverage in the other three is normal in banking companies. When looking at stock price performance over the last 52 weeks, Interactive and Jefferies have both delivered impressive returns of 136.35% and 124.89%, respectively, outperforming the market. Goldman posted a solid return of 78.95%, while Charles Schwab lagged with a 38.74% return. Now let's look at the market caps. Goldman is the largest company with a market cap of $200.35 billion, followed by Charles Schwab at $151.50 billion, Interactive at $80.75 billion, and Jefferies at $16.26 billion. Now, let's talk about the crystal ball moment, analyst expectations and fair values. Analysts have set varying price targets for these companies over the next 12 months. Goldman Sachs has a price target of $582.68, representing a downside of 4.25% from its current price of $608.57. My fair value estimates tell a very similar story. For me, Goldman Sachs is close to its fair value at $581.51, suggesting it is overvalued right now. Continuing with Interactive's price target is $166.80, which actually represents a downside of 12.71% from its current price of $191.09, indicating that analysts see the stock as potentially overvalued. And for me, Interactive, with a fair value of $161.42, appears currently overvalued. Now, Jefferies has a price target of $74.25, with a downside of 6.18% from the current $79.14. And for me, with a fair value of $67.12, can indicate a huge overvaluation of this company. Finally, Charles Schwab's price target is $78.85, representing a downside of 4.72% from its current $82.76, with a fair value for me of $74.23, which is far from the current price and can also indicate an overvaluation. These valuations indicate that while there is some potential for growth, investors should tread carefully and consider these stocks' current pricing relative to their intrinsic values. Each of these companies presents unique opportunities and challenges. From Goldman Sachs' close to its fair valuation to Jefferies' impressive insider ownership and Interactive Brokers' growth momentum, there's something for every investor here. Remember, align your investments with your goals, and as always, do your own research. If you enjoyed this breakdown, don't forget to like, subscribe, and hit the notification bell for more insights into the financial markets. Until next time, happy investing.